So now I'm going to cover oil because I know a lot of people are trading it really. If I go on the weekly, what you can see, well, the picture's quite clear, isn't it? You've come down and down and down and down for a significant period of time now. Really, you started to peak in September, way off from here. And this level was hit on so many times. Very contentious area. Price comes up, your stock oscillator comes up. You shouldn't be buying, believe it or not. People told me to buy at that point again. And then it falls. Okay, so we looked at it short, then we longed here. Many of my Academy members did that. And you came up, and then you fell again like this. So the point where you're at is showing you very minor strength to the long side, despite key price action levels. This initially was good, but then you've fallen straight from these key MAs. It was very ideal for hedge entries. I wouldn't be shocked, however, if you do get under here. Do not short the lows, just wait, okay? Just wait. If you get in line with this, you could take a minor long, okay? It's not my most preferred level. You've already hit it so many times, and it looked weak before. But I would say if you're going to buy it, I would rather do it nearer $68, okay? $68 for me is far more preferable. It would come off the back of a further move down, but I'm holding hedge shorts anyway, okay? You need a larger amount of capital to trade oil. Just bear that in mind, okay? Because the pip value is different. And even trading the smaller size, which practically anywhere is a micro lot, it can stack up fairly quickly, especially if you're entering more positions. So you really need to spread yourself out and have more capital. It's heavily sentiment driven. If you get a sudden energy crisis and there's a lot of demand for it, it can flip all the way up like it did before. Okay, so just be very careful. If you're going to short sell it, a very, very much preferred pullback would take you back to these key moving averages in line with where I'm labeling now. Okay, that is where I prefer it. Like I said, I don't think you're going to bounce up from here long. I think you'll be much better off about $68. But I would far rather short it up there. You could take a minor short, perhaps $77.8 may be ideal. But I do see this dripping further to the downside. At least on current market sentiment, you're not seeing anything considerable that would suggest otherwise. Okay, so I think you'll drip lower. I'm not saying to short it. I don't think you should be shorting lows at all. Okay, but you may find that you drip down further after that, around or under this low, $63, $64. Okay, that would come in line with this key moving average here. I believe that's your 200. And it would affirm what is now becoming a downtrend within that weakened market sentiment. So as people stop worrying about oil, the market comes down. At some point within a downtrend, just like you had previously, you've got to have a low. That's why I buy in downtrends, because although you're buying in a long-term downtrend, okay, if you put your time frame shorter, it's no longer a long-term downtrend. So don't buy into that if someone tells you shouldn't do that, because that's a load of rubbish. But if you're looking to long again and you're risk averse, you could even hold off for something like $55 if you get there. It might take a minute, but if you find there's an overwhelming supply, that would be very ideal, because it would be in line with what I just said. These lines are somewhat parallel. I know, I'm not the best drawer, but you can see what I'm saying. If it does continue as a sharp downtrend, then you would be better off long much lower, okay? Around $55. I think you may get a bounce just where I've drawn the former eclipse, okay? But ultimately, risk-averse longs, or people who are going to invest in oil for the longer term, I would just see where it can get. I wouldn't rush in. I wouldn't go crazy. There's a lot of negative market sentiment at the moment. There's weakened demand from China. US is supplying more. Middle East tensions are going and dying down, hopefully. So, well, I mean, even outside the market, but that's all feeding into market sentiment and a reason for people to say, you know what, I don't think oil is going to raise in value much more, at least. So that sharp downtrend, which I've labelled quite clearly, and I could probably just do it with an actual. To be honest, that was a bit lazy. I should just draw it properly, shouldn't I? Always have trouble finding the parallel channel on here. It's under one of these, I know. No. You see, computers draw my parallel channels on my broker automatically, so I don't need to do it. There we are. Took a minute, but we got there. It's a very important tool to have because markets are naturally range bound. That's what they do. If you don't believe me, again, scroll your charts back. Go and have a look. It's happened for years. Okay. But you can see sharp downtrend, very thin range from top to bottom. Okay. You can see 64.5 to about 92 or 3. Right. You've got about $30 of movement there. I wouldn't be shocked if you get in line with this KMA, your 200 actually dips slightly down and you end up down here nearer 55 ultimately, but you'll have to wait for that. So really, to short this, I would prefer a considerable move up. I think it's just far too late. Although I do think it's weak and it will crumble lower, I would really only enjoy it if you can get back up here at the least $78. And further, probably if I was going to space things out, okay, you may take a light entry around here or even higher, $85. So these two are preferable for me. But don't overload, okay? If you don't take it short there, hold off to $82. That's probably going to be much more preferable for the vast majority of people in here anyway, I would assume. But you could really see, okay, you had a push up here, you get this instant rejection, it pulls you down. Then you have a lot of buy side impetus there as we got to the end of, 10 days ago now. Not the last week, but the one before. But you come up to these KMAs and form a price rejection and you just get slapped down. So it's just telling you that the relinquishing of demand is what's causing that strong shorting action, and that's why it's falling and falling and falling. Okay, you can see that quite clearly. So shorts only above, longs give it a wide berth because you're coming off the back. Just remember, you're coming off the back from an extreme high all the way up here. Okay, it went a very long way. It peaked $130 or so, all the way down where we are, $50 lower. So be careful with oil. So that's oil. Again, link for my training is underneath.